Mr. Janson, how's it going?
Doing good, Robert. Glad to be back with you for our second edition of the earnings report.
Yeah, thanks for joining me. And we talked about Lyft last time. We did a wrap up of Square earnings. We talked about a preview of Lyft. Lyft has reported as well as DraftKings. So we're going to take a deep dive into those. Once again, thanks for joining Robert Falco and Dan Janson from Real Life Trading. Let's take a look at those Lyft earnings. By the way, if you did see our preview, that Naked Strangle that we talked about, selling a call somewhere up in like the 34 to 36 area and then selling the Naked Put down in the 27 to 28. Had a really nice IV crush at open, lifted gap down a little bit. But they were pricing in like a $3 and change move, almost $4 move. So there was a nice IV crush that could have been completed with that position. But let's take a deep dive into Lyft's results. I know it was pretty astonishing. Dan, what did you think about their quarter two here?
So, I mean, kind of what we expected, where some of the decrease in rideshare, decrease in revenue. I mean, it's easy to pinpoint exactly why a company like Lyft during the age of coronavirus is going to get beat up a little bit. But that's a pretty decent drop as far as the amount of rideshare. I mean, people, for the most part, a lot of people obviously staying at home, not working or working from home. That's gonna kill. That's gonna kill any transport company for passengers. But was it 60%? It's down in rideshare. That is a pretty massive number.
Yeah, 60% drop in riders and then a 61% drop in revenue. So yeah, it was pretty big. You can see that their main focus in quarter two, we successfully limited our adjusted EBITDA loss. So it was the first sentence is, hey, we're just trying to not lose a lot of money,
Right.
which was, obviously there's only so much you can do during, the lockdowns and everything else. But I know that we also saw some interesting stuff around their balance sheet here. And if we scroll down, where are we here? Yeah, cash flow statements. So this is their total cash on hand. This is in thousands. So this is 1,053,985,000. But you can see they had 567 million net cash by financing activities. So a majority of that coming from these convertible senior notes. I mean, I don't know how you feel about those, but yeah, they raised a lot of money from somebody. What are your thoughts on those convertible notes?
I think they did the play right out of Carnival Cruise Line's playbook, where just kind of just throw out some sales, try to bring in some revenue, which I mean makes sense for a company like this, especially to try to survive. So the play makes sense. It benefits them greatly, getting that extra cash revenue to survive on. But that's a bit. I mean, a little bit of a warning flag getting into a company that is really making their money from just issuing notes.
Yeah, and I didn't look at the particulars of the convertible notes. I know that we didn't really dive that deep, but like you said, at least they have money so that they can survive. But it's always a little bit of a warning flag when they literally double their cash on hand in that quarter. And are they going to be able to pay those people back? And then if the shares are at a certain price, again, I didn't look at the specifics, then they'll be able to convert them to stock, which is like their best case scenario. So, your thoughts on Lyft from here, just on a charting perspective, now that those earnings are over.
So we are hitting into some kind of resistance. It looks like on the chart. We You spoke about the abandoned baby that was in there. Did that actually fill today?
Yeah, it did, Phil. Yep.
So the abandoned baby did fill. So you got the moving averages coming down pretty heavily on it. The longer trend of it is been on the downside. So if we're talking to pick up for a longer term investment, I'd probably hold off at this point for me particularly. Um, I think it could possibly come down a little bit longer, especially not knowing. It, I would say this might be a buy when the actual vaccine comes out and people are able to start really getting mobile again. If that's the case, I mean, it might be a buy, but for right now, I'd probably look to just. I don't know if I'd short it yet at these levels, but I probably wouldn't buy it at these levels.
Yeah, if you already have some, I mean, I think you could definitely hold. Like, I don't know how much worse their actual results can get. They were pretty terrible. The reason it didn't move massively is because we already, yeah, kind of knew that they were terrible, and at least
Right.
they were able to raise money. So they have some abilities to survive, but I don't know if I'd be starting any new large positions in Lyft. Unfortunately, I do have some. I've been hedging with options. Uh, pretty aggressively, and so that's kind of like cushioning a little bit of that loss. But it's one of those. This is definitely the dog of my portfolio. It's not a large position, but it is small. I know you also brought up the price to sales. They're trading at a little bit of a discount to Uber, so they're trading at 2.43, whereas Uber is trading at 3.85. So from that standpoint, they're a little bit cheaper, but I know you like Uber better, right?
I do like Uber better. I think Lyft is more of the company you want to like. Hey, maybe it's going to be as good, but I think Uber's kind of more of the flagship in that type of specific industry. And market cap wise, I mean, Uber has a 56 billion market cap. Lyft, you're looking at a 9 billion market cap. Sales wise, your Uber's at 14 billion in sales when you have Lyft at 3.8 billion in sales. So just I think overall the stronger company. So if it comes down to, and I don't know if any of these companies are really in jeopardy of just completely wiping out and going under, but I think Uber is going to be, if you want to build to me a longer term company that I think has more potential to just be able to access the cash on hand, be able to just kind of use their network, expand, acquire another company, something like that. I think I would put my money more on Uber as a safer bet. Lyft, I think you are getting a little bit of a discount on it. So if you're in it for a shorter term swing or something like that, Lyft makes sense to me in that direction. But just I think Uber is just a little bit more of a, if comparing just apples to apples, I think Uber has more just market share, higher sales. So I think Uber is going to be a little bit stronger in that direction.
Yeah, and then what about the issues out in California? I know that they got an injunction. Both Uber and Lyft got an injunction against them to stop allowing them to classify their drivers as independent contractors. Do you think that they're actually going to shut down service in California, Uber or Lyft, and or both, I guess, or do you think that it's more of a bluff?
I think anything is possible. I know both companies have been kind of an annoyance to just regular taxi cab drivers in that sense. So it's been a disruptance. Do I think they might make it maybe possibly a little tougher for Lyft drivers just to sign up for Lyft and now they're a driver? So I could see some kind of criteria because I don't think the state of California itself particularly loves the fact that Lyft is existing because it is, while it's creating jobs, it's also taking jobs away. So I don't know. I don't. It's going to be interesting to see how it plays out. Quite frankly, in that. But and New York City has gone through the same thing. They had a whole big issue with Uber. Uber ended up possibly. I think I remember New York taking Uber to court, and I think Uber pulled out on top. So any of those annoyances that you have operating a company like Lyft, like Uber. The downside to it is if it gets into some kind of legal battle, it's just costing you more money off the top of your revenue to fight those type of battles. Um, and I think legally speaking of any of that, I mean, I don't see why Lyft would really have any type of issue. So I think they probably come out on top, but it will run them through the ringer a little bit as far as just adding more weight to the revenue portion of things.
Yep, they're already losing money, and it's going to cost them more with that litigation. So Cool. The next one I know we want to talk about, which reported today that this is a pretty popular one, is DraftKings, and something that as we were going through their earnings a little bit, I knew that they weren't in every state because I'm in Idaho. I can't log on to my old DraftKings account. Idaho doesn't allow it. But if we go over to their let's see their presentation here, I did not realize that they are only in a handful of states. I think it's where is it? Colorado, Indiana, Pennsylvania, maybe one or two others, but I think it's like six max. Yeah, right here: Colorado, Illinois, Indiana, Iowa, New Hampshire, New Jersey, Oregon, Pennsylvania, West Virginia. So one, two, three, four, five, six, seven, eight, nine. I thought it was a lot more than that.
Yeah, so it's I'm a customer for sure. I've both I use DraftKings and I use FanDuel, and I have the app on my phone. I tend to just go to FanDuel. So basically, within the state of Pennsylvania, uh, they've actually, I mean, we've been hearing the radio commercials forever. Both of them were based on fantasy football first, and then they started getting into more of the live betting. The cool thing with either of these, and just different than gambling's been around forever, sports betting's been around forever. The one thing that all of these companies have kind of revolutionized is the in-game bets. So like legitimately you could bet on if somebody makes a free throw as the game's going on. You could bet if there's going to be a turnover as the game's going on. So the growth of these companies, I mean, it's one thing to place a bet on the Knicks winning a game, but it's different to say, okay, yeah, you're watching the game and people are going to take action either way, especially if football season comes around. It's literally per drive that's made of what's the outcome of this next drive. So they are going to increase revenues. Um, Companies like this, and it's funny because as I'm driving from Pennsylvania, on the app I could place a bet. As soon as I cross the line for New Jersey, they shut it down. So they got the geo trackers in there and stuff like that. So you could only, and I know a lot of people from New York that just like they'll actually just cross over the bridge, sit in their car, and be able to place certain bets and stuff on games just because they don't have the access in New York. So it's a lot of it. It's kind of like the pot industry a little bit, where is if governments start regulating and legalizing sports betting, companies like DraftKings are going to be a front runner because they do have the brand name, they do have a large user base already, and they have been relatively smart about building physical presence as well. So inside casinos, they're like you could actually go into some of the smaller casinos and there's like a DraftKings sportsbook or FanDuel sportsbook, something like that. So I have high hopes for the company in a long term sense to be able to, especially when sports gets back to normal and stuff like that, and gambling is just more normalized and easier access for people to do. I think that they are going to, longevity wise, as long as they survive, they should be okay long term.
Yeah, just from a charting standpoint, we know they came public with like another SPAC or like a combination back here in late December, early January. But this huge run up looks like a double top, some type of retest of this neckline today. Big old high wave candle, pure indecision, right in the moving averages. I know we watched it a little bit for a day trade, but I think there's definitely some indecision at this point. And just based on, once we go into, first of all, if you go to their investor relations site, they have a really cool, where's their actual, their presentation looks cool. It's got Tiger Woods on it. It looks super professional. It should, they're a big company. It's got some numbers that look really cool, like this 20% revenue growth in June as sports returned. But we started to see some of this pro forma revenue. Again, I know they bought, I think it was SB Tech, and so there's some combined revenues in there. But that looked a little bit worrisome. Yeah, again, their graphics, the app, like everything looks great. They definitely have the name recognition, like you said. I think DraftKings is much more recognizable than FanDuel. But as we started to get into, where was it? It was there. So they have this term called ARPMUP. So that's average revenue per monthly unique player. So different industries do these like revenue per user and different things like that. Like if you look at social media. So DraftKings average revenue per monthly unique payer is what they call it. So the MUPs. You can see that last year at this time, the 3 months ending June 30th of 2019, they had 456,000 monthly unique payers. At the end of June 2020, only 295,000. But I know as we were both talking, we thought, well, it's down, but 295,000 people, like what were they even betting on?
Right. Yeah, and they are looking for some kind of anything to bet on. So two things with just those numbers as well. The one key thing in 2019 is you had the Super Bowl in that time frame where and DraftKings is still relatively new. Like, so they're still just kind of opening up, uh, getting more people to download the app, stuff like that. You have no sports being played until now. They're starting to come back, but you still have the seats empty, so there's still no fans. I think companies that have the mobile app that are like DraftKings that are, I mean, obviously only stadiums and sports being played in those 6 states that legally allow it for right now. They have, when fans go to the game, where else are you going to place a bet for, especially for in-game stuff or anything like that? So that's just a huge market. That's just not, you just can't utilize it right now. Nobody's able to do a game. So as Corona goes away, again, it's similar to Lyft. It's once both of these industries are definitely getting hit over the head by the coronavirus. Right now, sports are opening, so gambling is back on the table. I just don't even think it's in full force to where potentially could be, even in those 6 states. So once things start becoming a little bit more normalized, yeah, again, I mean, you have 295 in 2020. Why? who's legitimately placing any type of bet on anything? You have people with some serious gambling problems that are finding things to do. But the one thing with they did acquire, what was it, SB Tech,
Yeah.
and I think that does give them access. So on both FanDuel, both DraftKings, you do have the access to do like online blackjack, online roulette, online craps, things like that. Slot machines, which make zero sense to me. I don't enjoy games that I don't even know how I could win. Like, if 3 mermaids come up, does that mean anything? I don't know. So if there is still ways for them to make revenue through this, and I'm guessing that's where they got that 295 from. But I think you have a bigger potential to increase this long term.
Yeah, one of the things that is interesting is the average revenue per MUP or per monthly paying user or monthly, whatever it was, monthly paying user is actually up though. So year over year, 6 months, year over year, and then just quarter over quarter, year over quarter compared to last year, 63 versus 42. So the 295 people that were still using DraftKings definitely were making the company money. So that's nice to see. The one thing that I know both of us, we initially went to look in their presentation, there's nothing about how much cash they have on hand at all. So we had to do a little bit of digging. We had to go into their 10Q, and then we had to find their condensed consolidated statements of cash flow. And what's pretty interesting down here is when you start to look at, how much cash do they have on hand? Well, so this cash and cash equivalents end of period. So this is the end of June 30th. This is 6 months. It's unaudited. 1.2 billion. So 1,244,266,000. But what's pretty interesting is, well, where did that cash come from? Because the cash at the beginning of the period was only 76 million, which again isn't chump change, but you have to figure if they didn't have this 1.2 billion injection, which actually it's 1.5 billion injection because they lost some of it in the meantime, like where would this company be? And most of it came from that SPAC. So this is that proceeds from recapitalization of DEAC, I forget what it stands for, shares, net issuance of cost. They issued warrants, they issued Class A common stock. So they raised a lot of money in the first 6 months of this year. So again, it's good that they can raise the money, but we also take a look of, well, how often can they do that? Or is this, what they got in order to try and make this work? and through coronavirus, how long is that going to last them, kind of thing.
Yeah, and the other thing, just in general with DraftKings, both I would say, and I keep going back to FanDuel as well, just because I think they're kind of in the same league. I think DraftKings is a little bit bigger, but um, both of them are trying to be the pioneer in the industry. So the benefit to that, when the states do legalize sports gambling, I mean they've already got their brand out there. They already have the market share. People know who they are. Easy to download their app. But with anytime you're the pioneer in anything, I mean, it's going to cost you a lot of money to lobby to get states to change laws and rules, and they got to spend more on marketing than anybody else. So it's almost like the second company in it gets a little bit more of a free ride that we're just riding the coattail. So as it goes from 6 to 7 states, 7 to 8, 8 to 10, until all 52 or all 50 states are legalized in sports gambling. I mean, they have a huge untapped market, but they also are going to face, they're going to be one of the front runners to face a lot of the new debt built onto the company in order to get something legalized in that sense. But and I think the states are a little bit more willing to look at it now because they all need the extra revenue.
Yeah, that's also true. So before we close up shop, if you had to set up some type of trade on DraftKings, now I'm putting you on the spot a little bit. How would you look to enter, or what would you be looking for?
I love the hot seat. So I'd want to, based on the volume that came in today, based on the indecision candle, I do like it long term. So how I would play this is I would put some kind of, I'd probably get uh, a little bit less aggressive with my entry and put it above yesterday's high for it to see if we could break out of this downtrend.
Mm-hmm.
Um, if we are able to do that, and then I'd put my stop probably right below the, yep, you got it, right around
Right in
there.
here.
So I'd probably put my stop right around there. If it continues downwards or we start breaking that downward high wave candle from today, I mean, I'm not in the trade. I'm not losing anything. I'll keep my money to myself. But um, if we could get a quick break out of there and people start, especially if we start getting more news about either more sports opening or starting to even let every fan come in 6 feet apart or whatever the case is, I think that's all going to be positive. So they have a lot of potential positive news to roll out. Short term, yeah, I would see a trade like that, and I think bullish is the direction on DraftKings.
Yeah, this weekly candle is really nice. We love high wave candles. It has good volume. It's kind of right at this neckline of this potential double top area on the weekly. So really nice weekly candle. Great indecision candle on the day. So yeah, those are the ones that we're gonna wrap up this week's earning review slash preview. Our second one. Again, this was Robert Falco from Real Life Trading and Dan Janson. Don't forget to check us out over at Real Life Trading or on YouTube. There's tons of fantastic free content on the YouTube, and then we'd love to trade with you live as well. So Dan, thanks so much for joining me.
Absolutely, you guys. Thank you for tuning in, and we'll see you guys on the third edition.